I have two high growth stocks that I think are potential buys this month. Now, I've covered these two stocks before, but a lot of new information has come to light since the last time I made a video on them. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we're talking all things high growth stocks. Our respective timelines have no time wasted and get right into it. Stock number one, CrowdStrike, ticker symbol CRWD. CrowdStrike is a leading cloud cybersecurity stock, and it's an absolute beast when it comes to both their product and financials. Let's start with the former. CrowdStrike is a cloud-native cybersecurity platform, meaning it can be operated and deployed completely remotely from the cloud. Unlike a lot of the current cybersecurity providers, with Crowd, no on-site or on-premise physical installations are necessary. Now, there are so many cloud cybersecurity stocks out there on the market right now, so what is CrowdStrike's competitive moat? Well, they have something called the network effect. This is when the value of a service gains additional value as more people continue to use it. In this case, companies build vast, powerful networks by connecting their customers, and this network benefits everyone involved. And the only way to join this network is to do business with the vendor, in this case, CrowdStrike. The main benefit drawn from CrowdStrike's network effect lies in its use of artificial intelligence. All of CrowdStrike's clients are virtually connected, and by that, I mean if any one of them is attacked, CrowdStrike will first immediately stop the breach, then learn how to prevent any similar breaches in the future. And once it finds that solution, the system will deploy a new update to everyone in the CrowdStrike network of clients, and this update will include this new preventative measure. In other words, by joining Crowd's network, your cybersecurity will increasingly become better every single day. Another great thing about CrowdStrike from a business model perspective is that it can easily increase its total addressable market by simply adding more modules and services to the CrowdStrike suite. Right now, CrowdStrike offers a wide range of services and modules, and customers can choose which ones they want to add to their plan. Now, hypothetically speaking, if every customer of CrowdStrike decided to subscribe to every single one of their modules, which would be amazing first of all, wouldn't that mean that CrowdStrike's revenue has kind of reached its full potential and there's not much left to grow? Well, not quite. You see, every time that CrowdStrike innovates and develops a new series of modules and services, it adds another product that customers can sign up for, thus increasing their total addressable market yet again. And guys, I'm not even kidding, it took me like 20 minutes just to draw that little diagram with the yellow boxes using my computer mouse, so I would really appreciate it if you just consider smashing that like button if you're finding any value in this video at all. Thank you so much. And as more and more of the world begins to shift to cloud and more people begin to log in with different devices from different points of the world, more threats will arise, and thus more products will be necessary and required to defend against those threats. Now, yes, IT spending has been reduced due to the economic impact from the Rona, but get this. Switching to, listen, this is like boom, mind blown. Okay, ready? Switching to CrowdStrike actually enables companies to reduce IT spend while consequently increasing CrowdStrike's revenue. In other words, a lot of customers right now are using several different vendors for several different services, but CrowdStrike consolidates all of these services, tools, and technologies, and through this consolidation, companies save money because they deal with one vendor, CrowdStrike, instead of several. So yes, by switching to CrowdStrike, you actually reduce your IT spend while maintaining all of the services you had before, and CrowdStrike, of course, benefits very much. And this isn't just some BS marketing or PR, it's backed up by the numbers. CrowdStrike added 969 net new subscription customers in Q2 of 2020, and this is actually a quarter-to-quarter acceleration in customer growth. Yes, I said acceleration. Despite this global situation, or dare I say because of this global situation, CrowdStrike is wheeling and dealing, forming new partnerships, including one with a stock market darling, Zoom Video Communications. Okay, listen up, stop what you're doing. Listen, tune in, because now we're going to talk about the financials and you're going to want to hear about this. As I mentioned in other videos, CrowdStrike has an incredible 87% year-over-year growth rate for their ARR, or annual recurring revenue. Check this out. It only took them 13 quarters to go from $71 million in ARR to $791 million in annual recurring revenue. At this rate, within just a few quarters, they will soon have over $1 billion in annual recurring revenue. It's balance sheet time. To me, their balance sheet is beautiful. They have over $1 billion in cash on hand, and according to their statement of cash flows, $153 million of this new cash is from operating activities this quarter, and another $611 million is from the sale of marketable securities, which they held last quarter, and you can see that on the right-hand column right there. This means they have more cash on hand now than they do in total liabilities. More cash than total liabilities. And oh yeah, they have no debt. They're debt-free. We're off to a pretty great start if you ask me. And if you look closely, you'll see most of their liabilities lie in deferred revenue, which is just money that CrowdStrike has already received for services that it has not yet provided. In other words, as long as CrowdStrike does their job as promised, this liability will soon be recognized as revenue within the next 12 months. Additionally, they generated positive free cash flow for the 4th consecutive quarter, and it's okay if you don't understand this, it just means that they had cash left over after paying for all of their operating and capital expenditures, and for a young company and growing company like CrowdStrike, that is great. Now yes, I understand CrowdStrike had a net loss of over $29 million this past quarter, but look at that year-over-year improvement from a loss of $51 million this same time in 2019. I have almost zero doubt that CrowdStrike will find their way to solid, consistent profitability. Now lastly, before we get into the next stock in this video, here's the chart for CrowdStrike, and again, I'm a technical analysis novice, but personally, I don't think this is the worst place to start a position if you're in it for the next 3 to 5 years, and if it does get back down to the 115s, I will certainly think about adding to my position. Alright, stock number 2 is Maxar Technologies, ticker symbol MAXR. Now, no, hold on, if this is your 3rd time hearing me talk about this stock, just bear with me here because we do have some very crucial and exciting news for this company, and there's good reason why I'm talking about it for the 3rd time. Maxar Technologies is a space infrastructure and earth intelligence stock. It's often categorized as an aerospace and defense stock, but it's really a pure play on the space industry. Now, if you've been with this channel for a while now, first of all, thank you very much, and second of all, you'll know I've been talking about this stock for a couple of months now. And it is the only stock to be mentioned in now 3 consecutive monthly best stock to buy now videos. And since mentioning it in this video back on June 30th, it's up over 62%, recently reaching a new 52-week high this past week. And you might be wondering,
Matthew, if it's up 62% since you first recommended it, then why are you still recommending this stock? Isn't it run up too much? Are you just gonna take your gains? What's going on?
Well, ladies and gentlemen, I will let you in on a little secret. I think Maxar still has a lot more room to run. Now, I've told this story before. At the end of 2017, Maxar was under poor management, and a satellite malfunction combined with increasingly higher debt sent their stock plummeting over 90% over the next year. A very bad investment at the time. But now, under new management and a relatively stable balance sheet, especially compared to what it once was, Maxar Technologies is a fantastic turnaround play in my opinion, and it's a turnaround play that you can hold even after it's already been turned around. Let me explain. Now, I don't want to keep repeating my entire Maxar thesis every video that I talk about them, so if you want that original thesis, go to this video right here, and that's where I'm going to talk about their use cases for Maxar satellites, how well they're deleveraging their debt under new management, exciting things like their Vricon acquisition, and their New World View Legion satellite constellation launching in 2021. But in more recent news, 2 very exciting things just happened, and one in particular is extremely encouraging for the actual stock price of Maxar Technologies. The first is that Maxar won the contract for yet another comms satellite for Intelsat. And Intelsat is a company that provides broadband connectivity, video broadcasting, satellite communications, and much more. Now, this contract isn't huge news for Maxar, but it is the 2nd major contract awarded to them in between my different videos of Maxar Technologies, which just shows they have great momentum right now. And yes, I'm going to back this up with some facts. In their Q2 earnings conference call, Maxar specifically said that the demand environment for their services remains resilient and robust, and space infrastructure demand has also been little affected. Now, this second piece of news is extremely exciting for the actual stock price of Maxar and indirectly exciting for the company. Here it is. The CEO of Maxar Technologies, Daniel Jablonski, what a cool last name, purchased $68,000 worth of shares on September 1st. And Joanne, a director, purchased $13.5 thousand worth of shares on September 14th. Now, before you all rush to the comments to roast me and say,
Matthew, $68,000 and $13.5 thousand is nothing in the grand scheme of things, especially when you compare it to the net worth of the CEO, Dan Jablonski.
I know. Thank you for the heads up, Mr. Deep Voice Red Man, and I usually don't actually pay too much attention to insider buying because usually it's not that much, or they're buying it when the stock is obviously undervalued. However, the craziest, most eye-catching thing about this news story is the price at which these executives were buying Maxar stock. Hear me out. This is a one-year chart of Maxar's stock price. The red box here highlights the range of about September 1st, the CEO's purchase, to September 14th, the director's purchase. At these prices, $22 and $25 per share are by no means cheap or a discount. In fact, at the time, they were less than 9% away from the stock's recent 52-week high. Now, this is really interesting to see them buying at these levels because logically, that means there must be more room to run. In fact, legendary investor Peter Lynch once said, insiders might sell their shares for any number of reasons, but they buy them for only one. They think the price will rise. And by the way, a huge shout out to one of our top tier patrons in the Discord for pointing out this insider move back on September 2nd. That put it on our community's radar, and I ended up adding more Maxar to my portfolio on September 4th for about $23. I alerted all top tier patrons of my buy alert, and since then, Maxar has risen over 23%. Now, quick plug, if you don't already know, we do have an entire investor community on Discord through Patreon, with all sorts of channels talking about specific stocks, overall markets, even options and short-term trading. And of course, it includes my buy-sell alerts. It's a place to learn and really just talk shop. Additionally, I make exclusive videos for the top tier patrons, so if you're interested, make sure to check out the first link in the description below. We would love to have you in this more intimate community. Alright, here's the chart for Maxar Technologies, again doing my best with the computer mouse. So in the top right it says RSI with an up arrow next to it, and that's because you can't see it in this photo, but the RSI, or Relative Strength Index, is in overbought territory after this recent spike. I personally would like to see that cool off before adding any more. I think 24 would be an alright place to add, and 22 would be a gift in terms of adding any Maxar. We'll see if it comes back down to at least 28, which I believe it should, because Maxar is a very volatile stock, as you just saw, so maybe you can take that in your advantage. Again, there's so much more that makes Maxar a compelling stock, but I don't want to keep repeating everything, so make sure to check out that video, Best Stocks to Buy in August, on my channel where I talk more in depth about Maxar. And remember, these videos are more like stocks to watch this month, not just go buy immediately. YouTube just really likes that buy now title, but again, these are stocks that are on my radar that I'd like to share with you. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check out our quote of the day. We might just learn something. I put it in a photo this time. But again, we are improving this background very soon. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And be sure to check out the Patreon link in the description below if you're interested and you think it'd be worth your time. Thank you so much for watching at this point in the video. You are the real MVPs. Don't forget your peace and thank yous.